Apart from the certain procedural requirements like obtaining DSC or login credentials on TDS websites, or even MOU with the say buyer, etc., there is also a low deduction certificate application which helps NRI reduce the TDS burden. I will just explain in brief here that Section 195 says that TDS on any payment to NRI is to be deducted on the sum chargeable to tax. Now, in the sale of property, the sum chargeable to tax is obviously the capital gain. However, neither seller nor buyer has any authority to compute the capital gain on their own. Otherwise, the capital calculation is very simple. NRI does not get any benefit of indexation. So it's a sale value less your cost of purchase and also the stamp duty and certain charges. However, this computation can only be done by the assessing officer. And for this, only a buyer of the property, who is the person who is buying property from the NRI seller, can apply to assessing officer for this computation. After the assessing officer makes this computation, only the sum chargeable to tax can be arrived and TDS would be deducted on this sum chargeable to tax. Now this TDS is generally 20%. For the reduced rate of TDS, the seller, that is the NRI, can apply under Section 197 for low deduction certificate, and this application is online. However, for all practical purposes, it is always better that either the NRI or his consultant or the person who is giving the power of attorney can go meet the assessing officer and understand the rules which are not mentioned. Officer will tell you. Number one, he would require the valuation of property which NRI is going to sell. This is because if the sale deed is registered, then the stamp duty valuation is mentioned on the sale deed. However, if there is only MOU with the seller, the department would not understand what is the valuation of the property. So from the government approved valuer, the property should be get valued and that valuation has to be submitted along with the application. Secondly, if NRI wishes to invest in new property, he has to locate the seller and also enter into MOU with that seller, and the payment for the same should be already made. In fact, the rule is you can always buy a property 1 year prior or 2 years after the transaction of your sale. So if you have already bought the property, it is easier for you to get this deduction of capital gains. Alternative